All right. Welcome, everyone. Good morning, good afternoon, or good evening, depending on where you're joining us from. And welcome to another episode of the AI Circle brought to you by the iFlip YouTube channel. I am your host, Aaron Yoon. And of course, joining me is none other than our CIO, Kelly Korshak. Welcome, Kelly.
How are you, Aaron? Hello, everybody. Again,
Hello,
every
everyone.
week.
Yeah, absolutely. I think people are still trickling in, and we're getting off to a little bit of a slower start here. Or maybe they just know that I'm about to read the disclosures and they wanted to skip that part. I don't know. But we do have a bunch of things to get to tonight. We have the usual market updates, of course. We're going to get Kelly's insights into both the market, what it's been doing, and also insights into how the AI is interpreting all of this stuff that's happening in the markets. And we're also going to get into a little bit of iFlip's recent releases and upgrades to the app that I'm sure you probably have noticed by now. And so we're just going to talk about that a little bit as well. And of course, we're going to finish off with our trivia. So before we can get into any of that, though, we have to start with the disclosures. So bear with me as I go through this. Disclaimer. iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. Now that we have that out of the way, there we go. Kelly, I pass it back to you. Please catch us up. We've had a couple of weeks off. Catch us up on what's going on in the markets.
Well, up until literally yesterday and today, absolutely nothing has been going on in the markets since our last AI circle. Um, I'll try to get into it because we have launched a new major release. Aaron will go over some things in a little bit to kind of show you how the new look and feel will be, at least on the surface. Note that we are updating all of our systems currently, and and all of these things are designed to make the experience on when you're once in our app to be better. But that all being said, tell everybody any opinion I may express is only that of my own. And of course, Flip doesn't take responsibility for even though I'm an officer of Flip's personal opinions. Let's talk about the markets, because what I think we all are trying to kind of gather out of the markets these days is, which way are we really going in the US equity markets? In which way are we really going in interest rates? Are we going to have still higher rates, or are we going to have a cut later in the year and experience lower rates? Those are kind of the underlying questions the market, of course, always tries to answer. And we will attempt to do that over the next 12 to 17 minutes or so. So let's get into it. I think if everybody can see a chart in front of them, the word I have about this chart is called patience. I'm going to scale it out so you can see what's going on recently. This is essentially the year to date of the S&P. By clicking year to date, you can see that the S&P started right around here this year at around, let's make sure we're on the S&P and not the SPY Plus. It started out here in the beginning of the year, and now we are at about 384, and we're now at 404. That is approximately a move of about 20 points from 380, which only means that we're up about 5.5% on the year. That's it. So for a market that, if you're watching it or listening to the morning pundits, we always hear the market is trying to go up. It wants to go up. Well, if it does, it sure seems to be struggling doing so. And by the way, over the last 2 days, we've glided down. We are now down on April. April is a go nothing month. We started at this point in April. We are now down on the month. We were also down in the month in February. We had this, of course, big 7% rally in January, but all of that has faded. So we ended January right here at the high, and we are now off the high from the January. The market is going nowhere. The reason it's going nowhere is there is just too many headwinds. Right now, the market did try to rally, but it hasn't gone anywhere for the last month because they think the market has this anticipation that interest rates will be cut. We've heard it a million times. Yet inflation persists. Inflation right now is running at about 5%, and that's before next month's energy numbers come out. And when they do, it's going to show an increase in inflation. So the market has this anticipation that rates will be cut, but there is no evidence whatsoever that the Fed is going to cut rates. We also know that they may probably hike rates at the next Fed meeting, but then, of course, cut them afterwards. And the market has this anticipation again, and many advisors do, that they will cut throughout the rest of the year. I feel that that is wrong. I feel there are no cuts coming. Maybe we will see some next year, which means the market doesn't belong here. It is dislocated. I expect lower prices again, June, July. This is something we forecast early on, and we stick to the forecast. If you noticed over the last 2 days, it wiped out the last 20 days of rally. Just 2 days. And there was no real sell-off. We didn't see a 500-point move down in the Dow. We haven't seen any kind of significant moves down in the S&P. It just, for a market that wants to go up, it seems to glide down pretty easily. Let's look at interest rates, because guess what? That's really what they're all following. So we can look at interest rates by looking at the futures markets. That's a good place to look. And let's take a look real closely at the 10-year note. I think, folks, you can see here that we haven't gone anywhere, again, for a month. The interest rates are the same a month ago as they are today. They have not gone lower. Take a look at what the lows of interest rates were. Yes, back in October, which of course coincides with the lows in the market on the major move down on the S&P. But the market, of course, interest rates have come down on the long end only, by the way, since October. However, take a look. This, given the move of moving down, came from here after COVID. We moved all the way down here. This particular little rally that we've seen from the October lows to here is completely insignificant in the scope of what's happened over the last 3 years. And I feel it's more of a blip of what's going on. That being said, I don't expect long-term rates to really move that much. But if short-term rates stay at 5% and inflation is sitting at 5%, that means there is no real growth. And of course, that means we ultimately lose money on our savings. So a dollar, of course, is going to lose if our inflation is commensurate with our interest rates. This is not a scenario for a higher stock market. Another thing that I think is very important to point out is that the stock market rally that we have seen since October is largely due to literally 10 technology stocks. Let's look at one of them that had a big explosion today, Microsoft. So if we look at a market that has gone up, and I'm quoting this massive 5.5% of the S&P, then what did that? Well, let's look at Apple. Well, Apple from the October lows, which were here, right in here, towards the end of the year, look what's happened since this year, how much Apple has gone up. It was at 124, it now sits at 163. Anybody that could do the math know that that's 40 points, 40 points on that. There it is, up 15%. Let's look at Microsoft. Look at this, gap higher today. This almost always can be sold. I expect Microsoft right now, there's going to be a lot of option put buyers. You'll see this price probably filter down the same $20 that went up today, literally probably over the next week and a half. That's a trade, by the way, folks. When you see gap higher above 2 standard deviations, you always sell them. But if we look at Microsoft's again, since the beginning of the year, it went from 218 to 300, literally a 30% rally almost. This is, we see in Microsoft, of course, there's an element, a big element of the S&P and the Dow. We're seeing literally a handful of companies make the market go higher. But by and large, the market is still deteriorated. There's only a few things holding up. Dividend stocks seem to still hold up, but they're not really rallying. They're just holding up. We're looking at stocks across the board that appear to still continue to decay. Yet the indices are showing advancement. But I feel it's a false positive, folks. And sadly, my scenario, I feel, is going to unwind as expected over the next couple of months, and that we will see these lower prices that as we come into the main part of summer. And then from there, we can reevaluate after the next Fed meeting, which I expect one more hike. And that hike is only to make the rate of interest on a short-term note marginally higher than the rate of inflation, which I think will remain at around 5%. So based on the efforts of our government to control inflation, it is doing a lousy job. Our Federal Reserve is also not doing, I think, a good job. However, they are hampered because they're getting no help from the fiscal side, which of course is the government. So in many ways, as much as I'm not a Jay Powell fan, he is not getting any help from government to alleviate the inflation problem. So we have a lot of issues out there. Two things that also noteworthy. I think we noticed from the last meeting that Bitcoin, if we looked, did hit the 30,000 mark like we thought. However, it backed off pretty large the last couple of days, made a little rally today. I expect Bitcoin to trail down a little lower and looking for a buying opportunity around 26,000 or so. So there's a note on Bitcoin for everyone.
Right.
I expect further the dollar. Let's take one more look at that as we talk a bit further. Let's look at the dollar. Actually, we'll look at the foreign exchange markets. Let's just look at the dollar itself. About literally 6-7 months ago, I was pointing out we were looking for these trades in the dollar, especially with the measurement of the Japanese yen, when the yen was really going down against the dollar. Dollar was rallying significantly. Well, the trade finally did unfold, and it did unfold late last year at the end of October. It began, and it somewhat continues even till now. But that's just the yen. Let's look at the dollar as a whole. The dollar index as a whole is a measurement against all the major currencies around the world, generally with the 10 biggest paying the largest role, which of course are the euro currency, the Japanese yen, the Swiss franc, and a couple of other ones that are lesser known that we don't care about. But at the end of the day, this index is on its low right here as we sit. It has come off significantly from 114 to 100. That's down 14%. Why is that? Why is the dollar getting weaker? Even though interest rates have gone up in this country. Generally, when a country's interest rates are going up, its currency is getting stronger. Well, that has not been the case here in the Americas. Why? Two reasons. Maybe one technical reason is that the dollar might have been overbought at the heights of the dollar's rally at the end of September, early October. However, there's another scenario that's far more nefarious. That other scenario is that the country, as it continues its bifurcation between left and right, ultimately weakens its long-term standing against other governments that might be perceived to be more stable. The stability of our country is not just based on its government or its currency. It's often based on its peoples. And if the peoples inside of a country are divided, then that means essentially the currency is worth less. Because that means a country divided is not a country that can agree on policies that could strengthen or weaken its value around the world, its intrinsic value around the world. And I feel that this is a big part of the move down in the dollar. The other part, of course, is now that we realize that the countries that we used to see as our adversaries, the BRIC countries, especially, of course, China and Russia, they have now coalesced. They've coalesced with Brazil. They've coalesced with Saudi Arabia. They have coalesced with many other smaller countries in Africa in particular that make the US weaker overall. America, because it's fighting internally, is no longer able to have a foreign policy of any magnitude that could advance American causes around the world, which just leads to a weaker dollar. I expect the dollar to weaken further. Therefore, I expect also interest rates to ultimately go higher, not just to battle inflation, but to not lose its standing around the world. And the broader concept then would be what happens to the US equity markets and your money, because most of the people on this podcast are invested in the US stock market, where we do want people to be. That means that the US stock market likely will have more troubles in the future. Now, I don't see this forever. I am a long-term believer in the country and a believer that the US always does fix its problems. However, these particular problems are those that we have not seen in our lifetimes. And so these things likely will take longer to unplay. And they probably will be more painful than the things we've faced in the past, including the 2008 financial crisis. So I'll summarize like this before we get into a couple of the other little things that are very important, is that look for us to remain mostly in cash. If you are invested out there, my personal opinion remains to stay in things that offer dividends and ultimate protection of your portfolio in the event of a market going down, which are the conservative portfolio for 2023. I like that one myself the best. I am mostly there. And then finally, this is not a time to take advantage of looking for big opportunity in big tech. I feel that's overbought. I feel the pharmaceuticals have had their play and that's over. And so the best place to be is to put your money in the sides, which ultimately is invested, will be and can be invested in short-term denominated money markets that give you a yield so we can wait it out while we find out where these markets really are going. And if they go lower, it will create an incredible buying opportunity for us at some time, hopefully later in this year. And with that, there is my summary for, what is it, the end of April 2023.
So, Kelly, I do have one question for you before we move on. But before I get to that question, I just want to let everybody here know that our trivia question for today is going to be slightly different, right? Usually I give you a very short amount of time to get a question right. But as most of you, if you don't know this by now, shame on you. No, I'm just kidding. If you don't know this by now, we have an event coming up next week. Next Thursday and Friday, we have the Bulletproof Investing Live Virtual Summit. And you can check that out. It's absolutely free to attend. Just go to bulletproofinvesting.ai. I will put the link in the chat here right now for everybody. Let me just put that in the chat right here. If you're watching this on replay, it will be in the description down below. And it is absolutely free to attend. Now, most of you, I think, have already registered for this. It is going to be a generic kind of investing event, not just about the stock market. We will feature, the iFlip AI and talk about that, of course. But it's also going to involve real estate investing. It's also going to involve how to pay less in taxes, because I think everybody wants that. I think that it's also going to involve a concept called infinite banking, where you literally become your own bank, borrow money from yourself, earn interest on yourself. It's a really cool concept, and so much more. I'm not going to get into all the details right now. If you're already registered, then you probably know more about it than what I just said. If you're not, then make sure you head over there and register right now. Uh, just because it's free doesn't mean that it's unlimited, right? It is going to be a Zoom event, and Zoom does have a limited number of seats that you can have occupied at the same time. So make sure you register right now. Now, so that brings me to my question for tonight: is what? Let me pull this up here. The trivia question for tonight. I'm just going to select of all of the people who respond to this question. I'm just going to randomly close my eyes and select one of them to earn the prize. Okay, I'll get into the prize in just a moment. But the question is, what is the one topic you're looking forward to learning about at Bulletproof Investing Virtual Summit that starts next Thursday, goes into next Friday? What is the one topic you're curious about and you want to learn about the most? Just type that into the chat, and at the end of the show here, at the end of the AI Circle episode tonight, I'll pick a random winner. What do you win if you get selected? Well, we are going to the event is live, but not everybody is going to be available all day throughout the day, Thursday and Friday. So we are actually going to be offering a recording of it, and that is right now the pre-event sale price of $47. The winner for tonight will get that absolutely free. In addition to the previous event recording, which was Mastering the Markets Live. That's more trading focused, if you recall, from October. You get both. You get both recordings absolutely free. So make sure you type in your answer to this question. What is the one topic you're looking forward to learning the most at Bulletproof Investing Live Virtual Summit next week? All right. We have a bunch of answers already. Continue to throw them on in there. And Kelly, I'm going to bring it back to you for a moment because you said something that really caught my attention, and I'm just going to spend a minute here before we get into some of the new release stuff that we're going to talk about with iFlip. You said something very interesting, and I'm going to bring it up here. You said that advisors feel that rate cuts are coming, and you disagree. So I'm curious, could you expand on that just briefly? Why do advisors feel like a rate cut is coming? Like, what are they looking at that they feel a rate cut is coming? Is it just wishful thinking? What's going on? And why do you disagree?
First of all, I'm not sure if it's just advisors, but I think there's a lot of pundits you'll see on TV
Got it.
that happen to be advisors and they run money. Remember, 90% of the advisors you see on either CNBC or Fox News, they pay to be on those shows. And they pay to be on those shows thinking that they will gather customers, and they have to come up with comments and beliefs and ideas. And so that they have a book. In other words, they have a self-interest in saying something that hopefully will resonate with a potential client. However, I feel as I look at most of the people that show up in these shows, I don't feel they have a slightest clue, and beyond that they've been around long enough to recognize how things worked in the 80s. Now, I agree that history doesn't always repeat itself. There's always some kind of change. However, their belief for a cut is because they already have a book, they're underwater, and they know a cut is the thing that will make their portfolios look better. And I will admit, a cut by the Federal Reserve in interest rates will definitely create a market rally, even from these levels. However, what is the reason that we would see it? Historically, no rate cuts occurred for 6 years after Paul Volcker started raising rates. Rates came down on their own by the market, but the Fed didn't do anything for a long time. We are only 15 months into rate hikes, just 15 months. And we still have inflation out there. I think if you were a student of history, and I happen to be, sadly, I was around in the 80s and I watched the way things unfolded, there was no rate cuts, but everybody talked about rate cuts back then too. They just never occurred. So mine is based on experience. And my also thinking is, how do you cut rates and have a negative real growth? In other words, where inflation would be higher than the interest rate that we could get in the bank. So that makes no sense. It should be the other way around. Before, the interest rate we got in the bank when we were at the COVID lows, of course, that was zero. And inflation was almost very close to zero, about 1.25%. We had negative rates at that time. Right now, we have even rates. And we're in a more, believe it or not, normal environment. So I don't feel there's any rate cuts coming at all until they have solid evidence that the inflation will be under control. And I don't think that's going to occur this year. And at the end of the day, I'll just reiterate, I think people talk their books. Our books, I have no book here. I just have the mathematics that we use and the science that we've applied, and all the science doesn't expect any kind of rate cut anytime soon.
Thanks, Kelly. Yeah, I mean, I that really caught my attention when you said that, because yeah, it didn't make sense. I mean, I don't profess to be any kind of an expert in this kind of stuff, but it just didn't make sense. Why would they think that? But if they have a vested interest in that happening, that probably would bias their opinion, and that part does make sense. So thank you for clarifying that. Now, we are we got a ton of things that people want to hear about at Bulletproof Investing. I hope every single one of you that put in a comment is registering right now. And we're about to pick a winner in just a minute. I'm gonna spend the next 2 to 3 minutes though sharing with you some of the really major new updates that iFlip has released. Now, I can't spend too much time on it because we are running a little bit behind, but I'm just going to share my screen here real quick, and give me a moment, and boom, there we go. Now, this is the new screen that you'll see when you hit the invest button in your app. This is obviously a demo account. You'll see a completely blank right side. It doesn't own anything. Okay. But you'll notice that the Smartfolio icons look different, and I think they look so much cooler and more distinct. Before, they all kind of look the same except for the names and stuff. Now they're all distinct. We've divided up the Smartfolios into different categories. The first category is that everybody from now on, and especially if you're brand new, you haven't signed up for iFlip yet, you're still trying to figure out if it's the right fit for you. If you sign up for iFlip now as a new user, you will be you'll see one of the 3 core Smartfolios presented to you as your main Smartfolio that you're going to be investing in the stock market with. Now, we do have the conservative, balanced, and aggressive. Kelly already started to talk about it. So let's just go in very briefly into what these 3 are. Kelly, I'm going to bring you back up on the screen here. And if we could just briefly spend a minute on each of these Smartfolios and how you feel they're applicable for different kinds of investors and different kinds of people with different risk palettes and all that good stuff.
Well, again, these things will change year over year, and
Right.
sometimes inside of the year, depending on the situation of the market. So that's one of the advantages of what Flip does is we're more nimble. We will take advantage of things as we see them. And it's not us doing it again. It's just math, following certain kinds of rules to see if we have things we can apply science to that we feel has a high probability of success. And therefore, we would change out the individual items inside of any of these portfolios. But they are what they say. Conservative is a portfolio that is looking to garner returns in the form of dividends or debt payments on coupons. So the conservative portfolio, which is the one I like this year, is designed to be involved in companies that are paying high dividends and are less likely to be sensitive to a market downturn. If the market goes higher, they will participate in a higher price, and they will also pay the dividend. And that's one of the reasons I like it this year, because it's not an easy year to just make a bet that because last year was down, this year will be up. The balanced portfolio is a blend of some things that are aggressive and conservative. So it's kind of in the middle. It would more represent a 60-40 portfolio, which is the classic portfolio most people get when they go to an advisor: 60% stocks, 40% bonds. But of course, we don't participate much in the bond markets. Again, mostly because before interest rates at zero, who wants a bond? Really, just who wants a bond? So you might as well go to good corporations that are paying dividends that are better than anything you can get on a bond. But it gives the advantage that if you want growth, if you want to be involved in some technology companies or things like a Tesla that have more volatility and obviously much more upside, we got to participate in that too. And that's why it's balanced between something conservative and something aggressive. And finally, talking about aggressive, it is what you think it is. It is going to be technology companies, companies that are on the leading edge, but these are also things that we understand. They are not companies we haven't heard of. They are S&P 500 companies. However, they're the ones that tend to be growing the most, and based on all kinds of mathematical machinations, those stocks in there are chosen because of those machinations. And therefore, these are stocks that probably are not paying a lot of dividends. They're designed that in an up stock market, you're going to participate with a higher beta. In other words, market goes up 10% a year, we're going to try to make that one 15 to 18%. That kind of thing. So it has a high beta.
Absolutely.
And so, of course, the conservative has the lowest beta, and the balanced is right in the middle.
Right. Thanks for that, Kelly. So, of course, you're able to choose one. You're also able to, after you establish a core, let's say in this case, I just established that balanced is going to be my core. You can add the aggressive later on, or if maybe you're already in balance and you heard Kelly say he likes conservative, you want to buy some of that too. So you can just add that on there. No problem. You're still able to invest in multiple smartfolios. Now, the additive smartfolios that we have in the middle here, the list might look a little bit smaller than before. We are consolidating a lot of the smartfolios. I'm not going to get into too much of the details right now, but Kelly, you want to summarize just in like 30 seconds, like what the idea is here with reducing the number of additive smartfolios?
Conceptually, we're going to want to move and create things that are more motif based. Think of a motif as a mini theme. So if you have a theme, in other words, what you think is going to happen in the grander scheme for the overall economy, well, let's call that a theme. A motif is some sidebar of that same idea of what you think your theory is. So a motif, for example, is, do we believe the big tech companies over the long run are a good value and a good place to be invested in? Obviously, that's been true for the last 20 years. We now call things like, it used to be called the FANG for the Facebook, Apple, Amazon, Google, that kind of thing. But now we just say, hey, that's big tech. And there might be some things in there that you wouldn't have, that were not part of FANG, like Microsoft. SPY Plus, we no longer have SPY I, but that could be now moved into SPY Plus, because SPY Plus, of course, is really very similar to SPY I. It's a tighter portfolio, and we feel that that is the kind of a classic portfolio for young people that are first coming into the market. Let's make our bet in the S&P and a few other companies to a much smaller degree of investment. So it's like 80-20, 20% goes to some tech companies, 80% goes to the market. That is perfect for a younger person, and it's pretty straightforward. Red oil is oil. The energy concept is a motif, and we all have to agree. It's only energy. It must be a motif. It's not a theme. A theme is where the overall market goes. A motif is where some of the market goes. Four-quarter rotation is a concept. That remains because it's a concept that doesn't really use AI as so much as it uses a pairing strategy of following a concept of saying, hey, stocks that have done well in one quarter would probably likely do maybe not as well in the following quarter, but probably will still hold on to the momentum that they had in the previous quarter and go higher. If we keep rotating that, generally the returns are always much higher. It's a very aggressive portfolio. It's playing a concept. We love the idea of concepts because we feel most of the audience inside of Flip Investor like the same ideas. They want to be able to do things that you can't do anywhere else. And of course, there's S&P 500, and that just speaks for itself. I can't tell you how many people have come to me and say, look, I don't really care about stocks or the market. I just want to participate in the market. They know that the S&P 500 basically goes up 9.5% per year over the long run. And that includes the dividend. Dividend on the S&P has always been small, like 1.6% per year. So they just want to do that, but they don't want the risk that the S&P gives. So when you get that portfolio, you are just literally buying the spider and selling it when the algorithms and machine learning says to be out, and buying it when it says to be in. You are pure mathematics in that portfolio. It's all math. And that portfolio, honestly, is the flagship of the company.
Mm-hmm.
And if you own any of the other portfolios except the 4QR, you probably have exposure to the S&P 500 in various degrees. So that is the short and skinny of those 5 themes, motifs.
Yeah, especially the core. I think the S&P 500 is kind of the baseline for all 3 cores, and then the aggressive nature, the balanced nature, the conservative nature is part of the additive flavor that off of whether you're going to take more or less risk than just the S&P 500.
Right, and I'll just say one last thing onto that one, Aaron, to maybe qualify it more. Generally, say you say, I don't know where the market's going this year. Let me buy conservative. Well, you know what? Buy the conservative, put 90% of your money in that. And then you can take 10% of your money and put it into one of these other motifs. And because some people have a motif, hey, they believe in oil. They believe in technology. And they say, you know, I got to have some of my money specifically at that. And so do it that way. At the end of the day, instead of choosing your portfolios, it's to choose one of those top 3 things. They will outperform any thoughts you might have. Of course, you could trade manually, but at the end of the day, most people have an idea about where they think gas is going or technology is going, and they want to invest in that directly and specifically. And we've created a mechanism for that.
Thank you for that explanation and summary, Kelly. We hope that this new release actually simplifies your decision-making process when it comes to your investing and your Smartfolio allocations and everything like that. Before, it was just a kind of a menu of many, and there was no real distinction. Now we've kind of made it easier to distinguish what's what, and we hope that helps you in your stock investing journey. Now, on to the fun stuff. How are we going to do this? Kelly, I'm going to close my eyes. We're going to pick a winner right now. I'm going to close my eyes, and I'm just going to move my mouse around and scroll around, and then when you say stop, I'm going to click. Okay? I'm going to take my glasses off for this. So ready? I'm just going to close my eyes, and I'm just moving my eye, and then you just tell me when to go, when to click. All right. What did I click? That's not an answer. Bravo, Kelly.
That's why I told you to stop there.
That's good. That's very good. All right.
Do it again.
I will. Derek Dawson. I don't have my glasses on right now. Derek J. Dawson. I'm not going to take the prize away from you. You are absolutely a winner for tonight.
He gets it.
You get it. You get it. But I also want to highlight one of the topics one of the entries that was actually a topic. So let's do this one more time. Ready? Okay. All right. Ready? And just tell me when to stop.
Stop.
All right. Oh, it didn't. Okay. Well, it's this one. All right. Someone said real estate investing, and that's the user. Okay, so real estate investing. We have a really cool real estate speaker coming to this event, and I'm not gonna spoil anything, but let's just say he was able to build a 9-figure portfolio from scratch purely on real estate, and he's going to share with you how you can participate in something like that as well, right? Not saying you're going to make 9 figures. I'm just saying you can participate in that kind of a portfolio, right? Really cool stuff. Really big name in the real estate investing space. So you definitely want to be there for that. Now, how do you redeem your prize? Both of you, real estate invest or accelerant self-directed retirement plans. I don't know if that's, it's probably not your name. It's probably your company name. And Derek, you are our winners for tonight. You won both the recording that we will be distributing after this event and the Master of the Markets recording from October. How do you redeem your prize? Well, it's not enough that you got selected as a winner. You also have to be invested in at least one Smartfolio. And based on our little presentation today, there's many new ones to choose from. So you need to make sure you are invested in at least one Smartfolio and send us a screenshot of your account, or just send us your account number, whichever, to mailbag@iflipinvest.com. It's on the screen for you right there. Just send us a screenshot or your account number, and we will take care of you via email. And I think that about does it for this episode of the AI Circle. Thank you for bearing with us as we went a little bit over time today, but hope all of the new releases and the updates and all that stuff made it worth your time. Make sure if you like this kind of content and you want to tune in every other week, we do this every second and fourth Wednesdays of the month. So in about 2 weeks, on the second May 10th, I believe, will be our next episode. So consider subscribing, hit that notification bell so you don't miss the next episode live, and make sure you stay tuned for the next video from the iFlip YouTube channel. Thank you and good night, everybody.
Thank you, everybody. By the way, I love some of those comments that I saw from the gallery. Thank you so much. I agree with most everything I've seen. All the best, everyone. Till next time.
Absolutely. Yeah, we will be taking all of the comments here and setting it up as like the FAQs for the event. So anyone who put in a comment, you better be there. You've just given us content for the open panel discussion of the event. Okay, so I will see you all not at the next AI Circle. I will see you all at Bulletproof Investing Live. How about that? Okay. All right. Good night, everybody.